Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, December 11, 2023. We're looking at a daily chart of the SPY or SPDR, which is the proxy for the S&P 500. What do we have on the docket today? The melt-up continues. You'll see a couple of lines on the screen. We're starting with the obvious, the daily chart, what's jumping off the screen at us. We'll work upwards and downwards from there. The next number on the board is the next number in the sequence in the midst of the current melt-up operation. It is 462.70. By no means is that meant to be a final destination. Anything can happen. The point is, it's the next target on the way up. And there's more. Inside the number members, live room members will certainly have that information at their disposal, at their fingertips each and every morning. What are the targets? What's the pivot? Where is support? Where is resistance? They have the numbers. This is a numbers-based business. Above the downsloping trend line, certainly the bulls are firmly in control. They can come down to retest the trend line. They may come down to retest the trend line. For now, anything above the trend line is your friend. The trend is your friend until it's not. We're looking at one of those on-time type of situations. And why is that important? Because we talked about it a couple of times already at least. This is the week that a cycle, a tinfoil hat cycle type stuff is culminating. Doesn't have to happen. It's not a requirement. It's not mandatory. But what we do know is markets have a tendency to trade up into these events or down into these events. These events can cause a change in direction, a pivot, a top, a bottom. Doesn't have to be long-standing one. Just a pivot is satisfactory. It's quadruple witching options expiration week. Last one of the year, that's a quarterly expiration. We have alphabet soup this week. PPI, CPI, FOMC. We have Jerry's presser Wednesday afternoon after the two-day Federal Reserve Open Market Committee meeting ends. We'll get an interest rate decision. They're not expected to do anything this meeting. It's all about the press conference. What's Jerry saying? What's the forecast that's never right coming from the Fed? All that stuff. Write this down. Put it on a sticky note. 466.10 up to 471 and change. That's a zone of overhead resistance. It's certainly a little wide from an S&P perspective. However, it's akin to something like this. Here's a zone that we were talking about in the live trading room for several days, not only when they got there, but long before they did get there in Bitcoin, 43,003 and change, up to 44.5 and change, almost 46. And that turned out to be the overhead resistance zone. So that deserves a funny how that works. This week we don't know that it will, but it can culminate up in this zone for the S&P. 466.10 up to 471 and change. If you found the market up there this week, it's likely not going to just waltz right on through like it's whistling past the graveyard. Any one of those numbers and anything in between can reject price. What was going on today inside the numbers? It was a rather quiet day from a market perspective. They went a little back and forth type action this morning. Then they got on a little bit of a grind higher in the afternoon. That's typical in a quiet uptrending type tape. We've got a full complement of stuff this week. Nothing really going on today, but the market will pick up. The volatility will pick up later in the week. Again, alphabet soup and all that stuff we talked about already. What about today? Well, we've got a big fat round number of 460, and we have an early bull pivot of 460.15. Let's get right into it. We think better in pictures. Right of the vertical is today's activity. 460.15 is the bull pivot. What happened? Hung around, spike it, test it, come back to it, hang around, test it from above, try and rally, come back to retest it, and then take off for the rest of the day. That was the bull pivot. Above on candle closes begins to open the door for another leg higher toward the likes of 461.55 and higher. 461.55. 461.55. They got there, they hung around for most of the afternoon before jamming them a little bit higher in what we call an EOD or end of day jam session. Even in the last 5 minute or second to last 5 minute candle, the low in this candle is what? Precisely 461.55. It does pay to know your numbers. Higher stuff posted in real time as we need it. We were looking to buy the market down here at 458.80, but they never went down there, so we never got that opportunity. However, we did have traders on both sides of the tape this morning. We had some traders take advantage of longs. We had some traders take advantage of some short scalps. We had traders making money in the live room irregardless. We've got something for everybody. Before the opening bell, what's the story? Remember, we're waiting on the Fed. 461.50, give or take, is overhead resistance, a target, which worked out, and the front end of a zone up to 462.70, where they simply won't waltz on through and should have a reaction back down in the other direction. Well, they got there basically in the afternoon and just hung around all day. We'll see what tomorrow brings. You know what tomorrow's called. It's called Turnaround Tuesday. Pause the video, read the notes, go back to the chart to double check the work. I gave you the big picture. It's all in here. The market was in a very narrow range for most of the day. They were on a grind. It's one of those buy the dip type of situations. And everything was in here lock, stock, and barrel. And here's what you'll do. If you're interested and you think that you're interested in seeing this information to help you during the trading day, then what you will do is pause the video. You'll go back to the notes and you'll double check the work on your own charts to double check my work. Make sure I'm not bananas. About stocks on the move, we had 3 on the board today. 2 didn't hit their entry objectives, so they're what's called off the board. They're no trades. We want the stuff that comes into our numbers, not somebody else's. So we'll take a look at the chart of Coin, which happened to come into our entry objective today. Here's a picture of Coinbase getting a buzz cut at the open. And you can see here, this is the one you really want in the morning session when they come into the number on a nice straight shot. But here they came up short, bounced away, did it later in the day in the afternoon session, and they certainly bounced off of it. They gave you the deal. The high in this candle was 138.33, so they basically gave you $2 off that number, but in the manner in which later in the day it's not the same type of risk profile that it is earlier in the session. Nevertheless, repeat after me, the numbers work. So what's going on over in Camp IWM today? Well, they grinded up a little bit. They were up more earlier, but nevertheless, they finished up about 0.2%. Can't make heads or tails out of that, but what we can do is make heads or tails out of the mission. The mission is 190. Doesn't mean they have to stop on a dime at 190, but that's the minimum required target, 190. We don't know the path they'll take. They could pull back first. Above all the moving averages, the trend is your friend. The mission is 190. Look at this weekly chart. Remember, they were below all the moving averages where the trend is your friend. Now they're above all the moving averages. The trend is once again your friend. If, and it's a big if, capital I, capital F, if they were going to blow through 190, what's the next place they go? I have the number. We're not talking about it tonight. We'll bring it out if we need it. It's up higher by more than a couple of bucks above 190. By the way, you might want to jot this one on a sticky note. Best case for the bull case to continue up to 190 is you want them to stay above 185.50. Drop below, it doesn't change the bull case. It just opens the door where they can start testing some other areas, including down at that convergence of moving averages. Write that down, put it on a sticky note. What about the folks down at the transportation department? Buttigieg's crew. Ate some time off the clock in a consolidation / pullback / flaggish kind of pattern situation, staying above all the moving averages, the trend is, in fact, your friend. Weekly chart, above all the moving averages, same routine. Just getting an assessment. You want to make sure the bigger picture, like a weekly chart against a daily, gives you the same type of scenario. Do you have conflicting information or confirming information? We have confirming information. What about the Q people? Next area of importance is up at 397.85. Might want to put that on a sticky note. Buy them in bulk. Anything wrong with the Qs from a bullish perspective? The trend is your friend until proven otherwise. There is nothing wrong with the Qs. Now, you're going to have pullbacks. You'll have a pullback a day or two this week. Whatever the news item is will be attached to the pullback. CPI, PPI, ABC, XYZ, FOMC, Lupinacci vector, whatever it is. Anything wrong with the weekly chart? Nope. Above all the moving averages, trend is your friend. They've made a new recent high. Now they're working on this other stuff back here. No magic there. Anything wrong with the financials? Absolutely not. When there's nothing wrong with the financials, not that the market can't fall, but if nothing's wrong with the financials, it's a big part of the S&P. It's unlikely you get a big sell-off with nothing wrong with the financials, at least at present. Also, weekly chart, confirmatory, above all the moving averages, trend is your friend. Just challenging these pivots up here for now. Will they just waltz right on through? Probably not. Can they spend some time up here? Absolutely. What about Smashmouth? Same routine as all the other markets. Up 2.5% today, though. That was a big mover. That was basically best performer out there today from a market we follow perspective. Trend is your friend, all that stuff. You look at the weekly chart, they're at new highs, they're trying to break out. There is no resistance. What's the next resistance point? 170, give or take. Why? It's magnetic. Why? It's the next big fat round number. That's it. Nothing more, nothing less. They're breaking out. You look at a monthly chart, they're breaking out. We take the market at face value. We're the umpire calling balls and strikes, talking about all the markets across the neighborhood. What it looks like today may look different on Wednesday or Tuesday or Thursday. Remember, a lot of stuff happened in this week. This was day one of a busy week, and the fun has not even started yet. So be on guard. Put your seatbelts on. Market's going to move them. They're going to move them in both ways. They could spike them up. They could drop the rug out for a few moments, a day or so, trapdoor, all that stuff. Anything goes. Be on guard. Short video tonight, but I covered everything I intended to, so we'll wrap them here. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. True and accurate information. We're pulling the ripcord. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.